Hey everybody, it's Brian. Thank you so much for being here with me today. We're going to continue our lessons and talk about identifying and using trends, or more specifically, trend lines. So let's go ahead and get into it. First things first, I am not a licensed investment advisor, and I don't pretend to be one here. I'm just showing you information, tools, techniques, methods, things I've learned throughout the years, and I hope will help you on your journey to learn how to trade as well. Quick disclaimer, one thing we always need to mention is to be sure that you're only trading with risk capital. Trading has some amazing upside potential, but it also has an equally large downside potential. That means a lot of risk. So make sure you're only trading with money that you can't afford to lose. Of course, if you do want to read this full disclaimer, go ahead and pause the video here, take a moment to read through that, and then move forward at your leisure. So, trend lines. What are trend lines? Why would we want to use trend lines? Well, there's an old adage in trading that says the trend is your friend. And what that means, like the way it came about, is really from the fact that the market tends to continue moving in the direction it's already moving. It's kind of like inertia in an object. You learned about that in physics. An object in motion tends to stay in motion, and an object at rest tends to stay at rest, right? Same thing. The market's in motion, and it tends to continue on the same path that it's already been moving, unless there's some fundamental change that would cause it to deviate. What's the fundamental change? Well, news events, economic changes, different policy changes, things of that nature, that can cause a big shift in the momentum of the market and cause it to change directions. But typically, without something that's causing that change, the market will continue moving the way it's already moving on that current trend, whether that's an uptrend or a downtrend. It tends to continue on that path. Now, as we discussed in the previous lesson, the market doesn't just move straight up or straight down. It tends to do that, using kind of a cyclical up and back motion, like waves, if you will. So you'll often see the market move up, and then it'll retrace a little bit, come back down, move up to a higher high, come back down, move up to a new high, come back down. And as it does that, we would draw an upward trend along the bottoms. When the market comes down and reaches that pullback and then it moves on again higher, we would put the trend line at the bottom. So every time it kind of reaches its low before it moves on again, that's where we would draw our trend from. In a downward trending market, we would do the opposite. We would put it at the tops. So as the market is moving down, it retraces and comes back up a little bit, moves down to make a new low, comes back and retraces up a little bit. We would be drawing our downward trend on the tops of those little peaks, if you will. So that's how we would draw the trend lines, and that's why we might be interested in using trend lines because, again, the market tends to move in the same direction it's currently been moving. And that's important to us because as we use or look at potential trading opportunities, if we know the market is an upward trend, we might be better served to look at long trades, meaning buying style trades, so where we want the market, or we expect the market to go up, versus short trades where the market may be going down. Now, there are trends within trends. Again, the market is moving up. That doesn't mean that there won't be periods of time in that upward movement where the market goes either sideways or in a downward trend for a bit. So we'll get into that. Let's go ahead and pop over and look at some charts and see what we mean by that. So let's go out of here, and we will pop over here and have a look at an Ethereum chart. So this is cryptocurrency. I'm using TradingView, and we're on a chart looking at Ethereum versus the US dollar on a 15-minute time frame. Now we can see, if we look at this, that we've been in an upward trend. Has a pullback here, but ultimately, for what's shown here on the chart for this time period, we've been in an upward trend. Now, how do we draw that? Well, you want to have at least 3 touches to be a valid trend line. So let's go ahead and get our trend line tool, and I will go right here. We'll just do this one, and we can just drop it right here and go right through, just like this, and see that we've got a little bit of a trend. So this is an upward trend. We have the market moving, goes up, pulls back, creates a low, goes up, pulls back, goes up, pulls back, creates a low, goes way up today, comes back, touches this trend line, moves back up again. Now, lines on a chart don't make anything happen in the marketplace. We're just utilizing lines on a chart to give us an idea of what's happening out there. Trends are just kind of a basic tool that allow us to get a measure of the market. Now, as we scroll out in time frames and go to wider time frames like, a 45-minute or a 1 hour or even a 1 day, we're going to see different trends. Here's a little trend that we drew on that shorter time frame chart. But if we look at it here, going back into February, we can see that we're in a bit of an uptrend here as well. So we could draw a trend line straight across like this and see, we're in an upward trend. If we look at the bottoms of these guys, we can see that we are in an upward trend. Now, trend lines have to continually be adjusted, not like what we might see with support or resistance, where we have some of these key areas that are often supported, for lack of a better term, using support, right? But the key areas where price tends to struggle, whether it's a resistance point or a support point, where price tends to struggle. With trend lines, we're merely measuring the market to see how it's moving and get an idea of whether it's going up or down. So if we look at something on a wide time scale, like this was I thought it was a 1 day. Let's see, a daily time frame. Yeah, if we look at something on a daily time frame, we can see that we've got some trends within this. So we've had periods here on this daily time frame where we've had this longer term uptrend, but then within that, we've also had downtrends here as well. So we can see some downtrends right along this, where we've had points. Now, there are traders that will look at uptrends and downtrends and measure when they're coming together and what price is doing at that point, and they'll make a decision for whether they want to go long or short. That's a lot more advanced than what we're going to get into with this first bit of Trading 101. For Trading 101, we just simply want to be able to measure the trend to understand if the market's moving up or the market's moving down, and then we'll build on that as we get into the next lesson, which is talking about a very basic trade plan. And we'll go through how to set up a trading plan utilizing the trend and some levels of support and resistance, and we might even build into that a bit of a breakout style strategy. As we start talking more from this point, I think we've gotten all the basics behind us. We can create a basic trading strategy to get you guys going on something, and then we'll build from there to start talking a bit more about mindset, which is paramount when it comes down to trading. So anyway, at this point, we've hit trends. We've talked about the fact that we've got a way to measure trends using a trend line tool. Now, here in TradingView, it's just simply here on the left-hand side. Depending on what broker you're using or what charting software you're using, there may be a different way of drawing that, but there is definitely a trend line tool in every charting platform that's out there, that's widely available anyway. So you'll take your trend line tool. You want to have at least 3 touches and get an idea. If it's an uptrend, you'll be measuring from the bottom. If it's a downtrend, you'll be measuring from the top. And in the next lesson, we'll talk about putting this together with support and resistance. Just a quick hint on that would be, if we were in an upward trend, we might be more prone to buy as we hit key levels. Let me just put this over here. We might be more apt to buy as we hit key levels of support or resistance. For instance, today, well, this isn't today, obviously this is way up here, but on this, for example, we're in an upward trend, we had a big move, pulled back as it came down to a key level, we would be able to be more comfortable buying into that key level versus waiting for a break and selling, considering the fact that we're in an upward trend. So anyway, that's the gist of it. So we'll get more into this in the next lesson. Let me pop over here, see what we need to summarize for you. So just to summarize, trend lines, when combined with other basic tools like support and resistance, can be very powerful in helping us make good decisions around what and how we would like to trade. There are three types of trends. There's the uptrend, the downtrend, and there's also a sideways trend. Markets can get into a bit of a channel and do a very sideways movement where they just stay within a few ticks or a few points of where they're currently trading until that fundamental change occurs and we have news or something that drives the market to make a direction of change. We need three bottoms or three tops to confirm a trend, just as we showed before. And just like with support or resistance, the more touches, the more strength we have. All right, so that's it for me for now. You guys all have a great day, and we'll talk to you soon. Thank you. Bye.